Welcome to another episode of Blockrevision, and in today's episode, as promised, I will show you the most important charts that are right now morphing and may indicate some important changes to the markets. In terms of economic outlook, I will put the broader spectrum in tomorrow's episode. Today we'll focus right on the charts. So I'd like to start off with US WTI, US dollar to WTI crude oil. Right now is showing that it's trying to break from this symmetrical triangle. So it means that we are fighting for possible break lower at the levels of 94.95. Right now, another very important support will be just seen at the levels of 82.84. So it means there will be more than 10% drop in price. For now, however, price is fighting for remaining in this area of importance. We can find there is such of a bullish reaction due to this price, and we may find that it may wait for a little longer. However, the environment is not kind of a favoring that bullish scenario, as US 100 right now is showing some possible pivotals. Those candles of yesterday and the day before yesterday, that was Friday, the previous working day, was just pointing that we are maybe topping this formation that started right back 1.5 months ago on 16th of June. So it's very important how this reaction may be. However, recently you may find that those volumes that were met on those two candles, those power candles, has been met with a much resistance, and a large volume has been just inflowed in. So right now I do find that there might be a local top, and we may slide lower to the levels of 12,500s, but it's a little bit too early to say. At first we need to break those levels being set right around 12,700s and 800s. By then we obviously have on a 15-minute chart this support right being formed around those areas. So it makes US 100 right now not very attractive to short. I would rather hang on for a better occasion. In terms of other indexes, on SPX we are exactly in the similar scenario. We are right now stuck at this previous consolidations level, where there's an order block, supply block right attached to 4,000 hundreds levels. So I do find there might be a resistance that may stop the price for a little while from now. In terms of Germany, we are right now just newly hit the recent resistance at 1460ish, and there might be also a possible top, but first we might have those liquidity being grabbed out. So another hit of this ceiling, this price ceiling, is expected. 600s levels is one to be tested out probably in the hours or next sessions, the nearest sessions to come. In terms of France, we are right now observing a very strong price reaction, but the one that hasn't coincided with a big of a volume. So that means there's a lack of confluence in order to have the chance to push the price from here even further. At first, we need at least consolidation, or otherwise there might be a bigger chance to slide the price even lower to the levels back of 6,100s. So right now, this week, as yesterday's was rather standing or rather appearing like it might be another bullish week for indexes. Right now, due to this Monday's reactions, I am a little bit more doubtful, and I do expect that there's a higher chance to get some profit by shorting rather than longing those key indexes. So as the last of the major indexes, I would find out what's going on with UK 100, and right here we are not finding any of the specific formation we may that may prompt us to take this or that position. So I wouldn't touch UK 100 until any of these extremes will be finally got. So in terms of Russell right now is trying to get closer to the previous highs of June, and there might be also a pivotal area for this index. Let's have a look at very interesting of recent months commodity index, and this one, after a very strong relief rally after this major slide, we may find that there is expected to some of the resistance to stop this index for a while, especially with this volume, this Marubozu candle being noted. Afterwards, we are seeing a drop by a few percent, and due to possible reaction to the correction, we may get back to 121s, and afterwards another move downwards might be seen. So that's from commodity index. In terms of agriculture fund, we are right now consolidating, but with a higher chance to maybe continue this recent bullish wave, but before that we need to get over this recent bearish candle being noted at 29th of July. In terms of crude oil, already been discussed. That's however, natural gas futures is very interesting, as right now we are continuing this slump that been started right after this very strong reverted hammer been here written. So right now I do find that natural gas futures might have continue its move towards the areas of value at 6.7 and 6 bucks. So these are the most important indexes. However, I would like to have a look also at crypto, and crypto right now is trying to get through this 25,000 area, but recent reaction to this level has been found as the one that is stopping the price for a while. So right now Bitcoin is not in a very good position to maybe take position to the upside, but I would wait for the reaction right at the levels of the ones that recently been of value, that is about $21,000. So that's it from Bitcoin. Ethereum right now also is meeting this very strong supply, and that means that we are right now more likely to go downwards rather than upwards. However, we can't forget about the event that is coming up more likely at on 26th of September, on 19th of September, that is this proof of stake transition of that cryptocurrency. So that would spike some interest, that possibly spike some interest on the crypto market in terms of this asset. So Ethereum is awaiting for a little bit longer correction, but the possible stop might be seen right around the levels of 1400s and even back to 1460s. Alright, so that was the quick recap of what's going on the market. Tomorrow you will get the full episode regarding the sectors such as market outlook, cryptocurrency outlook, trading ideas, and so on and so forth. So thank you very much for watching, and see you tomorrow.